Hey everybody, I'm just going to go ahead and add Rob. One moment. It should be coming through in a minute. Hey
Hey,
Rob,
how are we looking?
I think we're good. Live. We'll give everyone another minute or so to join.
Awesome, awesome.
Is that the new office?
Yes, this is the new office. Well, just a small corner of it, I guess.
I haven't had a yet.
Yeah, soon, I guess.
For sure, for sure.
um, yeah.
Joining.
What's that?
We have a few people joining.
Yeah. Looks good. Looks good. I'm excited. Excited to get the information out there. I feel like this is one of those things that's like if you don't know, you don't know. You know, like you don't know what you don't know type of thing. So hopefully this sparks things up for some people.
Yeah, and a collab between the two of us is a long time coming.
Yes,
So,
I think so too. And hopefully more to come.
for sure. Awesome. We have quite a few that are joining. So kind of as we go throughout our live, if you have any questions, go ahead and leave. We'll address them towards the end. Thanks, Sean. Each topic, which is true. Talk, event space, retreat leaders, together. This is like first time that this is happening.
Yeah, for sure.
Hey, Sarah. Oh, Rob, how do you feel about getting started?
Yeah, let's do it. Go for it.
Awesome. So welcome everyone. Thanks for joining our live event today. We're going to be covering 5 critical tips that are going to be helping your business. I mean, as soon as like this year. I'm Victoria, founder of RetreatProfits, and I'm talking to Rob Shoyett from Taxdoc. Rob, do you want to start by maybe just briefly yourself?
Yeah. So my name is Rob. I'm the Taxdoc. I've been doing this for about 10 years now and 6 years with my own practice. I'm an enrolled agent. And what that means is that I'm licensed by the United States Treasury to prepare tax returns, advise on them, and to represent taxpayers in tax court in all 50 states. That's pretty much me. I like to pay it forward and provide this kind of information. So here we are. Let's do it.
Awesome. Jump right in. Maybe just the first topic that we're covering is around business entities, which is a little bit topic, so maybe you can help us down. But essentially, for any retreat leader that's just getting started in the industry, one of the first questions that you're going to have to tackle is what type of business entity you want, how to structure it, that are. And so, Rob, I mean, we don't have too much time, but is there a way to kind of summarize the topic, give your perspective, what the implications are of all these different entities?
Yeah. So there's a few entities out there, and obviously, I'm sure you heard this before, but I got to say this is not legal advice, nor is this financial advice. And it's barely even tax advice to the extent that everyone's situation is super unique compared to the next person. So this is like a general overview of any kind of tax benefits or tax implications of these entities that we're going to review. So to start, you just have your sole proprietorship, no entity. You just decided to get into business. You're trying it out. You don't feel like you need any kind of legal protection just yet. And we call you in the tax world a Schedule C filer. So Schedule C is a part of the individual tax return where you report your income and your ordinary and necessary business expenses. And based on your profits, if any profits, you will pay income taxes at the federal level, maybe your state and local level, depending on where you are. For the purposes of this, we'll just cover federal stuff. And then you also have your self-employment taxes, which cover your Medicare and Social Security deposits for the year. Since you're self-employed, you don't get a W-2, you don't have that withheld, so that's where that's covered. That's very simple, very straightforward, not much to think about there. It happens on your individual tax return. The next step that people usually take is filing and opening an LLC in their state. And an LLC is strictly a legal structure. This is a large misconception that people have. Some people think that just because you filed for an LLC, you can now deduct every expense under the sun just because you have a business.
Oh, you
It's
can?
not true. It's not true though, right? So you'll learn that the LLC is completely disregarded by the IRS. They don't recognize it at all. It doesn't mean anything. And so if you have an LLC, yes, you're protected from a legal aspect, and speak to your attorney obviously about how. But from a tax perspective, you are the same thing you were as a sole proprietor. File on your personal tax return. It's a Schedule C, income, expenses, taxes, or if there's a loss, there's no taxes, then it can carry forward to future years to offset future profits. Then the next, and this one is very common, I feel like, and people kind of jump into it without really knowing much about it. That's the S Corp Tax Structure. As an LLC or as a corporation, you can elect what's called the S Corporation Tax Structure. And there is a time at which it becomes super beneficial. You get to shelter a lot of your money from certain taxes. However, this is a conversation you want to have with both your attorney and your accountant to know when you're ready. There is a certain point at which it makes sense to transfer over, and that's when your profits are at a certain rate. So, the S Corporation, the drawback of it is the administrative requirements that are revolved around it. You have to keep very good and clear bookkeeping. You have to monitor your equity in the business, how much you're putting in, how much you're taking out. And then like the one big kahuna for everybody is reasonable compensation, which is a term that most business owners have heard. Many don't know what it really means. But what it says basically is that when your business becomes profitable, the first X amount of dollars that come out of it into your pocket as an owner, as a shareholder, must be paid as reasonable compensation, meaning the same style as a W-2 from your regular day job. Your business will withhold federal taxes, Social Security, Medicare taxes, and any kind of state and local requirements as well. And then after you pay a reasonable compensation for the work that you're performing, then the rest of the money you get to just withdraw directly into your bank account, like a bank transfer or quick pay yourself or Venmo yourself, however you want to do it. That's where the tax benefits come in. The profits that come after you pay yourself this reasonable compensation are not subject to Medicare and Social Security taxes. So,
Just
yeah,
wrap up quickly, because it's probably going to be one of like the key questions that comes
yeah.
up. Who determines what reasonable compensation is? And
So that's an excellent question. That's an excellent question, and I think that everyone will kind of answer it differently. My response to this question is the absolute most right thing to do is to do a study, is to have a study done in your area for other professionals who are doing the work that you're doing. What are they getting compensated as an employee for that work? So how you have to imagine this is, if I have an S Corp tax business and I'm an accountant, I have to look at, if I were to take somebody else and put them in my shoes to do the bare amount of work that I'm doing, what would I pay them on a salary basis or an hourly basis? That's going to be my reasonable compensation. And then everything after that is going to be those profits that I withdraw and save a little bit on taxes with.
all right, makes sense.
That's your, and that's going to be considered your passive income from the business, which is important to note as well. So those are kind of like the three big ones. And again, it's like I said, everybody's situation is so unique and individualized, because you might have a husband or a wife who does something, you might have kids who are doing something, you have all these different tax credits and deductions and other sources of income and investments and so on, and everything ends up looping back in at the end of the day. One last thing to note about the corporation structure is that it is also a pass-through entity. So again, speaking on a federal level only, your S corporation will not pay its own taxes. It will report the profits and the income and expenses, excuse me, but then that number, whether it's a profit or a loss, passes through on a form called the K-1 to your personal tax return. So you don't get a corporate tax rate, you get taxed at your individual level when everything loops back in with your other sources of income or deductions.
Okay, that makes total sense. I didn't think that we could summarize all the entities in a short period of time, but it's extremely insightful. I guess the one thing to just revert back to is how important to talk to your lawyer before doing what kind of corporate entity, them working through the process with you. Yeah, so definitely. So the next topic that we wanted to cover, and you kind of touched on, right, which is bookkeeping.
Yeah.
So especially for retreat leaders, it comes up often, right? Like, what do we do with all of our income and expenses throughout the year? And also, what tools are available to us to optimize the process? And so, are there any that you suggest? And maybe in general, start with what are the basics of what we need to optimize?
Yeah, for sure. Just one note I want to make on the previous topic is
Yeah.
don't let your lawyer be your accountant, and don't let your accountant be your lawyer, because that happens all the time, and most of the time they're wrong. That's all I have to say about that. About the next topic though, about the bookkeeping aspect. So yes, very important to keep books, some sort of record of bookkeeping, even if you're just a sole proprietor starting out and not really sure where it's going to go. Because if anything hits the fan, if you're asked questions, if you want to go back and see how your business is performing quickly, you just want to be organized. And it's way easier to be organized from day one than be a year deep and then realize, oh my God, like I got to go back and figure all this out. The easiest way, probably for most people, is going to be an Excel sheet. We all have knowledge of absolute basic Microsoft Excel or Apple numbers or Google Sheets, whichever one you prefer. And you have your date column, your income column, your expense column. You download your bank statements and put all the information into there. And you do the best you can to categorize, meaning this was income from performing a service. This is what I spent on my vehicle expenses. This is what I spent on my business meals. This is what I spent on some supplies for my retreat, and so on, right? Very simple. You'll present that to your accountant at the end of the year. They'll give you any kind of pointers, notes, corrections, and you move on. That's like the basic level of this, right? The next level is to self-prepare on a bookkeeping software platform. So that's going to be something like Wave Accounting, for example, which is a free service that you can sign up to. You can, even with most banks, connect your bank feed into Wave Accounting. It'll download all your transactions automatically, and all you got to do is go in and just click buttons and just say, this is for this and this is for that, categorize. And again, present the reports to your accountant, whatever they're going to ask at the end of the year, and take it from there.
I love it. I've actually been integrating into my business. It's been
Awesome.
super helpful. More so as like a personal tracking tool. I still then kind of, talk to you, obviously.
Yeah.
Great start for me just to be able to like classify everything. So awesome tool. And
I definitely come from the school of thought that you should try to do things yourself at first, so that when you do come and talk to me and ask me to help you with it, you already have some sort of basic understanding of what I'm referring to when I say certain things. So the fact that you started to do it on your own, don't take it too far to where you're uncomfortable, but just get that basic level of knowledge. So Wave is great for that because it's free. Then if you want to take the next step and have some more functionality, be able to upload your receipts, be able to print certain reports, be able to invoice to other people from that platform, I'd probably recommend with going, my two top guns are QuickBooks and Xero, 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 which has been the up-and-comer competitor to QuickBooks lately. So I've kind of used both platforms. I like them both. The fee structure is a little bit different, but you can still self-prepare on there. You can connect your accountant to view what you're doing on there so they can comment on things and you can ask questions. And it's just going to be a little bit more of a professional and reliable tool for you. So that's the next thing, and that's still with self-preparing. And obviously, that leads us to the last thing, which is where you hire somebody. You hire a service to perform all of the bookkeeping tasks for you. You allow them access to your bank records, asking you questions from time to time, and they'll charge you most likely a monthly fee or a quarterly fee or a yearly fee, however that person works, and you can go from there. For me, personally, as you know, I'm very helpful, so whether you pay me to do something or not, I'll probably give you advice anyway. Many accountants might only help you out if you're on this kind of monthly service with them where you have access to them all the time. And that's very helpful for you because as a small business owner, the most random questions come up out of nowhere, and you just want to feel safe that you can just text somebody or email someone and get an answer pretty quickly.
I feel like where I have to stop you thank you for like late night Saturday texts of Rob, what am I doing in this spreadsheet? And you minutes after that. So thank you for all. There were a lot of them.
Yeah, my pleasure. That's what I do. So for sure. And also the other part of paying someone to do it is when you just have too many transactions to take care of. Your business has picked up now. It's gotten a little more busy, or you're lazy, or you can't stay on top of things. You want to be handheld, whatever it is. So that's in the grand scheme of things. If you're running a successful business, what you're going to pay to your accountant and your attorney and your financial advisor are just a drop in the bucket. Yeah. That's how I feel about it.
That makes total sense. And so we kind of have different options for different people, right? When you started and you want to do things on your own, and have limited kind of transactions to maintain so far, all the way up to, okay, let's be able to do us, partly because it may be the logical and the smart thing to do, but also time consuming.
Yeah.
Add on spreadsheets, but for some people that I want to do. So it could also be from a time management standpoint, figuring out what involvement you want to have in the business, and sometimes just outsource components of it.
Yeah,
so,
absolutely.
Makes total sense. We talked about bookkeeping. Also, kind of throughout, you mentioned record keeping, which to maybe most of the people that are listening, they're like, what the hell's the difference? There is a clear difference. And so I wanted to touch on it, especially retreat leader standpoint. What's happening is we have tons of expenses that come up. We have income, potentially from retreat sales, right? And all these different other stuff we can do, but expenses can happen before the day of the retreat, right? We're paying vendors, tips, right? We're buying supplies, as you mentioned, for the retreat. And have different miscellaneous expenses that happen on the day of, right? You're running and getting the entire group water. So a constant question that I get from my clients is, well, how do we track this? Do we need to? Are we keeping, receipts? And for how long? And so if you can just give some insight, because that's one of the questions that comes up the most often when we think of record keeping.
Yeah, so obviously a great question. So the thing with record keeping is that these records you're going to keep are almost never going to come up unless you're in that less than 3% of people who catch an audit from the IRS or a request for information to substantiate your expenses. So one important thing to distinguish is that when you come to me to prepare your tax return or whoever you go to prepare your tax return, you don't have to show me your receipts unless I feel like something shady is going on. I'm not really required to ask you to show me that stuff. Give me your spreadsheet, give me your reports, and we go from there. Now, in terms of, aside from that, obviously you should still be performing the record keeping. And again, as long as you start from day one creating good habits with it, it's no big deal. So anything you purchase for your business, keep the receipt. If you purchased it online, obviously you have a receipt that came to you by email. It's very easy. But if you're going out to get water, like you said, or you're going to fill up gas in your car, for example, you want to print that receipt, you want to get it, and you do whatever you want with it. Shove it in a folder, take pictures of it. You can, if you're using any of these platforms like Quickbooks and Xero, for example, they have features where they have an app on your phone and you can just snap a picture of that receipt and match it directly to the transaction that happened, crumple it up and toss it away. You don't need a paper copy. You can have a digital copy. It's just recommended to have more than your bank statement because that receipt will be itemized and it'll show specifically what the transaction was for. Mm-hmm. That's one part of it. If you take this to the next level, it's also important to write what this purchase was for. So this purchase of water was for this project because of this. This business meal that I had was with this person to discuss this advancement of my business, or it was with my accountant to discuss, tax planning for the rest of this year, as an example. If you're driving somewhere and you pumped gas, where were you driving to? What was that for? A couple of small nuances, small tips to give is with meals, if the transaction is under $75, you are not required to keep a receipt. But you should keep a log of who you met with, when, where, and why. And for driving, even though most of the time you'll use your actual expenses rather than the allowed standard mileage rate by the IRS. Even if you're using actual expenses and printing your receipt at the gas station or keeping the receipt for the tire you had to change or the oil change you had to do, you should be keeping a mileage log. So this trip that I took was for this purpose, to meet with this client or go to this retreat and prepare, or whatever the case may be there. So those are just a couple of the smaller tips for that.
Yeah, that's super useful. And especially food during a retreat is going to cost way more money for everyone. I always invite clients to, meet up before, mingle, break ice for the retreat. And so just knowing what that, cutoff is, and you said it was like
$75. If it's under $75, no receipt necessary.
Everyone, gets together, grabs some coffee. You have to itemize and kind of figure out. So, having that in your back pocket, but also being super, super coordinated from the beginning, as you mentioned, right?
It's all about building habits, right?
Exactly. And so I remember the first time when I just got started and I literally had my purse where I dumped out tons of receipts and I was like, what do we do with these? And so a folder's great. I've gotten a little bit better, as you know now, Rob, but for kind of just setting those habits. So that's super, super helpful. Maybe the best way to kind of conclude is if you can provide us with some, tax tips that can help us today, and they can kind of be across the board, but just something that you think would be really for our community to.
Yeah, so definitely going to give you some stuff from across the board, random. One of my favorites, everybody hears about it, but nobody really knows how it works, is the home office tax deduction. Home office is a huge one. So the way that a home office tax deduction works is, first of all, it must be obviously in a home you live in, and it must be the primary place that you perform business, right? So if you have an office somewhere else that you rent and you primarily perform your work there and you want to deduct the home office, not going to work. But if you're like one of us that, are especially your people are probably digital nomads, or, they're renting one place for 6 months at a time or a year at a time, then moving somewhere else, then the home office definitely comes into play. And the way it works is there's a standard deduction rate per square foot or your actual deductions. So what you would do is you have an area in your home dedicated specifically to performing work and only work, no leisurely time, nothing else. Let's say you live in a 1,000 square foot apartment and your office space is 100 square feet. That's 10% of your apartment used for your home office. And so you'll take all your actual expenses, your rent or your mortgage, or you'll take your electric bill, your internet bill, your phone bill, and you'll take 10% of all of those things, and there'll be a deduction for you against your income. So it can definitely add up depending on where you live and how you live, right? So a very important one. That's number one.
Have a lot of office space.
Yes, but exclusively for business.
Right.
Exclusively for business. So that's that one. Then the kind of goes hand in hand with this is going to be use of personal items for business that kind of double. They're like your personal thing, but also you sometimes use it for business. And two common examples of that is your cell phone and your car. And it works very similar to the home office deduction in that you know how much you used roughly of, with your cell phone, I'm going to say roughly, it's a little bit difficult. So you know that 30% of your phone calls are strictly regarding business. 30% of your internet time on your phone are strictly regarding business. And so what you'll do is you'll have a tax deduction for 30% of your cell phone bill throughout the year.
Right. And does it matter local or international? You have a lot of happening.
No, so the key with expenses is that they must be ordinary and necessary for the work that you do. So if you're a retreat planner, international is probably ordinary and necessary for you. So right. You can definitely use both. It makes sense to me. And then with the car, kind of the same thing. You have your total miles driven for the year, 10,000 miles, and you know that you drove 5,000 of those miles because you kept that mileage log that we discussed for business purposes. And so 50% of all of the expenses that you had with your car, including your lease or finance payments, including your maintenance on the car, your insurance, your tolls, your gas, that you'll take 50% of those expenses and use them as a tax deduction as well. So that's number 2.
And so actually, before we jump to the next one, I saw that Sarah had a question, which kind of goes back to record keeping, but also applies here. So for example, if you're paying your cell phone bill and it's actually a digital receipt, which you had mentioned in the past, just that is enough, like an email of the payment made. So specifically, like digital receipts are fine in any form, right?
Yeah, so having a cell phone makes it super easy for 2 reasons. One is because you're going to get that digital broken down itemized receipt. It's going to show your cell phone line, the type of service that you pay for. And moreover, if there was ever an audit or a request for more information, you can go to the phone companies and get a log of all your calls. The internet time is going to be a little difficult for them to prove against, but the call logs, you'll just highlight this call was business, this call was business, this call was business. And again, to emphasize, digital receipts are still important to keep. It's just not something you have to think as actively about because it's already in your email or it's online in your account. And if you forget, you can always go back to it and get an archived copy.
Got it. Okay, makes sense. And kind of before we jump into the next tips, we have one more question. So from Julie, specifically when you're talking about the home office, right? Limitation to what type of residence it is, right? Like co-op or you own it, right? And it's a condo. That,
No limitations.
like you could be renting an Airbnb.
Yeah, no limitations at all. It's wherever, it's just got to be your primary place of conducting business.
Makes sense.
That's all it is. So yes, it could be your house, it could be the basement in your house, it could be your apartment, your co-op, you're renting this place short term, it can totally be any of those things. As long as you just do the expenses associated with that place only.
Got it. Makes sense. Okay. Awesome. I'm going to stop interrupting for a few minutes. Keep going.
So that was number 2. Number 3 is kind of simple and probably obvious, but it's still one of those things you need to mention, which is try your best. If you know you're going to go into business, open up a separate bank account for your business activities because you're going to get lost in it. If everything is mixed in with your personal account, and when you're a sole proprietor or you're just an LLC, it's fine, have it with your personal account and then, extract everything later on. But you're going to forget what was for what. It's going to be much more difficult, time consuming. And in most cases, it really doesn't even cost anything for you to have a separate bank account. Maybe there's a minimum balance requirement or something. But it's totally worth your time to do that. Have separate accounts, have a separate business credit card to rack up some points. There's always bonus categories. And especially for retreat people, you guys know how important points are. So
travel.
Yes, absolutely. So that's kind of thing for that. And if it comes to S Corps and you're my client and you don't have separate accounts, I'm either telling you to do that today or bye-bye, not dealing with you because you're just too disorganized to have an S Corp. You're not ready for it yet.
Right.
That's number 3. Number 4 is estimated tax payments. So when you are earning money as a self-employed individual and nobody else is responsible for withholding taxes on you, like if you were working your regular 9-to-5 job, you get your pay stub and they've already taken taxes out for you. If you're doing this for yourself, you want to be on top of your estimated taxes. The main reason for this is that so you don't have any of what's called penalty for underpayment of estimated taxes on your tax return. And essentially the way to avoid that is either pay 100% of the tax liability you had for the prior year, so the total amount in income taxes you paid the prior year. If you pay 100% of that this year, you're good. You avoid that penalty, even if you made a lot more money this year. Or you want to pay 90% before the year is over of what your current year tax liability is going to be, which is difficult and tedious for most people to count up until you're getting really down to like the last week of December and you really know what happened already. So estimated tax payments are important to pay on a quarterly basis and reassess them constantly. I would prefer to reassess them at least twice a year, so at the point that we do your tax return, and then maybe around like September, October, something like that, 6 months later.
Yeah, and we're talking both federal and let's say state.
Yep.
So figure out what that, what those metrics are, probably just by going online, right?
Yeah, oh well, yeah. I mean, you can Google, required estimated tax payments or avoiding the underpayment or estimated tax penalty, and you'll find those requirements. Or just write back and ask. Write to me and ask, and I'll definitely explain it to as many people as needed.
Awesome, makes sense.
After estimated taxes, number 5 is going to be the self-employed health insurance deduction, which is pretty particular. And this especially applies for the sole proprietors and the LLC owners. If you or your spouse are not offered health insurance by another employer, so if you have a day job or if your spouse has a job and that those employers do not offer you health insurance and you have to go purchase it on your own, the entire cost of that health insurance will be deductible on your business tax return. So that's a good one to keep in mind as well.
Awesome. Okay. And maybe very nuanced, but if you're also getting medical like as you travel abroad, do you think that that's something that could be well, like you get travel insurance, also can get medical?
If it's medical. If it's medical, yeah, the travel insurance would not count. But if there's a medical component to the travel insurance, you may take just that portion that's responsible for the medical component, and that would count because that's going to be health insurance for sure.
That makes sense. I mean, Rob, this was not only insightful, but also very timely, given that are quickly. I'm sure you're going to get busy as well. So maybe just a good time to think, taking the time out of what I know a really, really busy schedule to talk to the community. And kind of on that note, I know that you did have an offer for everyone listening, but also specifically for clients, if you wanted to introduce that to everyone.
Yes, absolutely. So as an offer, anybody who's watching this and sees this, you can go to my scheduling link, which will be below when we post this. It's calendly.com/realtaxdoc/consult, and schedule an appointment. They're normally 20 minutes, but for you guys, we're going to extend to 45 minutes. And so whatever we need to discuss, we will discuss, and I'll be more than happy to help you out. And then for those who end up working with you, Vicky, for your clients, what we're going to do is if they come to me, we'll do $100 off their business and their personal tax returns. So $100 off each where applicable. And then we'll also do, if they want to do bookkeeping, 2 months for free in the first year.
Okay. That's incredible. And so no break questions, just to reach out and pick your brain, which I do quite often. So you're a plethora of knowledge. Rob, thanks for being you. Super awesome and talking to everyone. Didn't see any other questions come up. I think we've tackled everything. If any questions do come up, reach out to Rob. You can come through and I'll pass them along. But I think that's all today.
Yeah. I think I saw a question that was about taking photos of receipts, which I did mention that, yes, that works. Absolutely. You can go ahead and do that. And I just wanted to mention that, if you want, you could follow me at RealTaxDoc on all social media. Schedule with me. Like I said, the consults, even if you come for the 20-minute one, are free. I always try to provide as much help as I can, as long as my schedule allows for it. Text me on WhatsApp, 929-296-4000, and we'll post all of this below so people always have access, and especially your clients. And
cool. Yeah,
thank you for having me on. I'm happy I was able to share this.
For sure. And so we'll have it directly in our feed. So for anybody who wants to friend or rewatch later on, it'll be available.
Beautiful. This was great. Thank you.
Likewise. Have a great day, Rob.
You too.
Cheers.